I want to bring in from the CBOE, Scott Bauer. Scott, what are you watching right now in these markets?
You know, this next 45 minutes or so might be a little bit more volatile than we have seen because of the Russell reconstitution. So, you know, the market made a nice recovery from those early morning lows. We're almost near the flat line pretty much across the board, but volatility is not going away. We did see the VIX hit 20 earlier today, just briefly. It's actually down a little bit on the day, but there's still a lot of upside call buying in the VIX. So I think with the shortened week next week, and then we're really just right into earnings season, there's not going to be a lack of volatility. I don't think we're going to see the typical summer doldrums that we see here. I think we're going to see a lot of back and forth. Volatility will remain. And obviously front and center, amongst other things, is the question of rates. And, you know, with the inflation data that we got, with, you know, kind of that dot plot and that hawkish lean, short-term rates moving higher, dollar moving higher, how is that going to play out? And I think that is really throwing a big wrench into the equation here, and one of the reasons why I expect volatility to remain somewhat elevated.
Are you expecting rate hikes later this year?
No, I am not, actually. You know, we look at the Fed and they're data dependent, but unfortunately, the data is in the rearview mirror. So, you know, they have said for months and months now that due to the rise in oil prices, that's going to, you know, really put a crimp on inflation, and we're going to see that play out, which we are seeing now. But now that we're $30 a barrel, $40 a barrel almost off of those highs, that should start playing out as we get through summer and into fall. So I think that is going to flow into the rear view data dependent marketplace that the Fed is looking at. And when we get to the fall or so and we start to, in my opinion, see inflation numbers start coming down, I do think that the chance of a Fed hike maybe comes off the table.
How concerned are you about what we've been seeing in small pieces of evidence, not really broadly, but, you know, it seems like we've seen a real rotation away from tech, and you see investors moving into, frankly, things like healthcare, consumer cyclicals. I mean, these safer investments. Does that trend continue? Because that's, I would think, a little problematic in a year when you're talking about these blockbuster AI IPOs.
It absolutely is, and I think that's part of that narrative of a stronger dollar, higher rates that we're seeing. I don't expect that to last very long, Cheryl. I really don't. I think this kind of rotation that we're seeing right now is more risk off, and you can't really blame people, right, for where the market's been, and especially those that have, you know, kind of ridden the highs of some of those stocks and some of those sectors to where they were. I don't think it's going to last very long, and I would expect some buying to come in to some of these stocks that have been beaten up over the last several weeks, like an Alphabet, like a Meta, you know, even Microsoft.
All right, Scott Bauer, great to see you. Thank you for being with me.